Hello and welcome to BQ Prime. You're joining us on Bankable, our special interview program where we're discussing various topics, some conceptual, some business realities with India's biggest finance names. And today, for this conversation, I'm joined by Mr. S Chakravarti from Shriram Finance, the MD and CEO of the company. Mr. Chakravarti, welcome firstly to Bankable.
Thank you.
You're now the second non-bank finance company I'm talking to as part of this series. So let me first start with the one thing that everybody remembers about Shriram Finance, the latest news point, which was the merger that was announced, a sort of restructuring of how operations were functioning within the Shriram Group. What has changed pre-merger announcement till now in terms of operations?
Actually, nothing much because except for the products that we were handling, both these companies, Shriram City Finance and Shriram Transport Finance, but more, the way that we operate, the platform, the tech platform, the accounting policies are all mostly uniform. So, on the business side, what changed was in most of the Shriram Transport offices, now we are able to offer all the retail products, whereas they were focusing only on used truck earlier. Mostly used truck. Now we are converting some of these branches into offering gold loans, small business loans. Basically, these are the two products that we are taking to the Shriram Transport branches. Particularly in states like UP, Madhya Pradesh, Rajasthan, where Shriram City doesn't have a large network of branches. We are banking on the experienced manpower and the branches of erstwhile Shriram Transport. So, similarly, when we were earlier in Shriram City Union Finance, when we were funding businesses, a lot of these businesses were using vehicles for their captive use. So, which were funded by other financiers, some by Shriram Transport, but mostly by other financiers. Okay. So, now that there is an opportunity that we think we can actually
cross-sell better.
Cross-sell the vehicle loans to these customers.
Yeah.
So, and during the whole process, each of these teams are getting trained in the nuances of the other products. So, if you ask me what is the change, I mean nothing much, but it's helping us grow, probably take our products to a larger audience in newer geographies.
Okay, fair enough. Let me come to how these businesses have evolved and the kind of customer base that we're dealing with today. As far as Shriram City Union Finance and Shriram Transport as these two independent lending businesses that were continuing under the same umbrella, how have these businesses evolved in the current era where now we are post-COVID? Everybody's pushing this digital sort of a connect with as many customers as possible because that's considered a cheaper way of distributing loans. But your business is highly customer sensitive, it's individual relationship sensitive, right? I mean, does the digital model really fit into the current business format?
See, for me, actually you put it very right on the kind of customers that we deal with. And we actually prize our ability to reach to a customer and build a relationship with him. Now, for me, digital for these set of customers is how do I make their life easy?
Yeah.
Or how do I make my disbursement faster to these people rather than do a faceless transaction?
Yeah.
So, how do I reduce the paperwork? Let us say, for example, how do I KYC? How do I do the KYC without obtaining a paper? Basically, reduce paperwork as much as possible, increase the TAT, so that I can service the customer more efficiently, and also the ability of my sales team to reach more people. That's what digital is for me. It is not that we do not have digital. In fact, there is a separate segment of customers whom we are now trying to target, in particularly the metros
Yeah.
and the large urban cities, where today our two-wheeler loan is an end-to-end digital process. The customer's paperwork, probably they'll be signing one paper.
Yeah.
Other than that, nothing else. Similarly, for personal loans, for some of our customers who are there in the metro, we do personal loan only, as of now, only to our existing customer. But for them, it's a end-to-end zero paper disbursement. That's one set that we are actually looking at, but that will be a small part of our business. But for my larger set of customers who are small entrepreneurs, maybe running a truck, maybe running a business, small business, for them a personal relationship matters a lot. For the customer also, they actually price that personal interaction. I think one comfort that we were able to give to them is that we reach out to them, we go and meet them, whatever their needs. They don't have to come to my office.
Correct.
So we actively discourage our people sitting in the office. I still remember when we started air conditioning our manager's offices. I mean, not the branch, the branch manager's cabin. One question Mr. Tyagarajan asked me was, why are you air conditioning branch manager's cabin? He was supposed to be not to be in the office. So what is the point? So, I mean, to put it, see, the customer derives a comfort that you are reaching out to him, right? You are reaching out to him, you are talking to him, you are trying to understand what his needs are.
You're present in front of them. Yeah.
And it doesn't stop with disbursement of the loan. The customer, even though the customer say he honors let us say a check or an e-NACH on a regular basis, but you still go and meet him because you want to find out how he is doing, whether he needs more help or what's happening in the business. It is also an education for my team when they go and meet these customers. So it's like almost like a family relationship that gets built, and with that comes this stickiness of the customer to you. So you may be 100 basis points more expensive than the next guy, but the customer would still like to go with you because of the comfort that you are giving him.
That brings me to the question of how businesses are perceived in the analyst and the media circles. You know, when it's a lending business, cost and balance between the cost and income is a very, very crucial metric that people look at.
Yeah.
In the business that you're explaining, the cost element automatically goes up because obviously there's a cost involved in all of this. How much is acceptable to you?
See, I'll put it this way. We actually, I mean, when I am pricing a loan product, I price it for 3 factors. One is my cost of borrowing, my cost of operations, and the expected credit loss. So when I take all this into account, that's the reason why I'm saying I may be more expensive than the nearest guy. But my customer is happy because of, as I told you. So what is acceptable is, depends on product to product, but my cost to income ratio, we would like to keep it at about under 30. We are under 30, but yeah. So see, we do have a healthy NIMs, but our I mean, if you look at the market, there could be people who are seen as much more efficient than us in managing an NPA, but that's a conscious call that we have taken, that you know, the kind of customers that we want to service, we are working with, there will always be cash flow mismatches, and we are okay with slightly higher gross NPAs. But significant thing that we need to I need to highlight is that our credit costs, our absolute credit cost has remained in the range of between 2 to 2.5 for the last 20 years. So there may be the delinquency may look high on a gross level basis. But if my absolute credit cost has never crossed those levels, because there is a cash flow mismatch. It's not a willful default. There are a lot of people have temporary cash flow mismatches, particularly the kind of customers that we actually service, because we actually service majority of our customers come from semi-urban rural areas, and they have these cash flow mismatches. So we are okay with it. Customers pay, say, a 24-month contract. Probably customer may end up closing the contract on the 27th month, 28th month, and because of that he may lose his credit score. But I would happily service him again and again and again, because for me, end of the day, his intention is very important. The temporary, customer slipping into an NPA coming back is a process of, it depends on the economy, it depends on his, on the probably, so a lot of rains in a particular area could affect it. But they are going to come back and pay you. They are not stopping it. They are actually, probably those 2-3 months, they may not be able to pay a couple of months, but the next month onwards, they will start paying you. I mean, generally I found that most of the businesses, most of the businessmen would like to be, how do I put this? Okay. General people would like to be honest if given a chance. So you need to give them that chance, and not put too much of a pressure on them, and make them borrow at high rates to repay you, which is defeating the whole purpose of servicing this segment. So for me, I digressed, but coming back to your question on the costs, see, I think we are pretty comfortable with the cost to income as of today. As I said, the other reason, other way to reduce that cost is, reaching more customers, probably more efficiently, reducing the paperwork, reducing my turnaround time, and increase the productivity of my sales guy, rather than reduce my team.
Okay. Fair enough. Let me come to the other side of the story, the customer base. Now, you said that a lot of your customers are semi-urban, rural customers. Since a big part of your book, about 80% of your portfolio would be vehicle financing. A lot of these are the smallest possible entrepreneurs or young businessmen across the country. What does this period of COVID look like for your customer base?
Not just this 80% of vehicle business. We also have about close to now about 19,000 crores of small enterprise business, MSME funding business. We fund the micro and small enterprises. Basically, I think you can equate them to a truck owner, small truck owner.
Correct.
It's a business for him.
Correct.
Similarly, somebody running a grocery shop is a business for him. Probably they would be neighbors. So there also the average ticket size for that specific segment of business is about 6 lakhs. Our overall size is about 10-12 lakhs, but to this segment it is about 6 lakhs. So I mean, both have undergone the same challenges. Probably the trucker a little more because of the lockdowns during that time. And also the small businesses, some of the businesses were shut. Other than essential services, some of those businesses were shut. There was a lot of, our biggest worry was what is happening to them, because business could come back, but what is happening to them? So what we did during that period was we have reached out to every single employee of the organization. They were all at home. We have reached out to all of them. Each of the employee, we have given between 100 to 200 customer contacts. All we asked them to do was call up the customer, find out how he's doing, how is his family, what is happening, and assure them that we will support them. This is the only exercise that the team has done. So probably every week, we were calling our customers, talking to them. And in turn, every week, the regional heads, the state heads were talking to their teams And we were also participating in some of those conference calls to understand what is happening in the market, what is the feedback from your customer, what is the support they require. Surprisingly, when the moratorium came in,
Yeah.
most of the customers have not opted to take the moratorium. They said, please, when they understood that, the tenors are getting longer, and what they were saying is, please don't. We will try to pay up in the next 3 months, next 4 months.
Yeah.
We don't want moratorium.
Yeah.
Then all of us discussed and we said, okay, the worst case scenario is your gross NPA is going up by not giving a moratorium. Well, let's do that. And
Was that also part of the advice that you gave to the customer to not go for this because it will affect your future borrowing?
no. See, moratorium has not affected any future borrowing. But wherever people were willing to, we have allowed them to not to take the moratorium, because see, for a 50 months loan or a 60-month loan, if you are in the first 1 year, this 6-month moratorium is extending your loan to by about at least a 12 to 18-month period, which is actually, see, the problem is it is difficult for them to understand why the tenor has gone up by 12 months or 18 months.
Only for 6 months. Why is it gone up at 12?
So,
yeah.
and it's also difficult for you to explain to them in an understandable manner.
Correct.
So we said, boss, this is what is happening. This is what is going to happen. If you are comfortable, take the moratorium.
Yeah.
A lot of people said, we don't want the moratorium. We will pay you up. In fact, a lot of them have paid up. And we also said, okay, there will be a slightly elevated GNPS, but we will take it because when the customer, unless the customer is comfortable, you don't want to push it.
Yeah.
So, most heartening thing is the moment businesses have opened, they have started paying. We were so uncertain of what is going to happen to particularly the small businesses, because they were the hardest hit, and of course the truck operators were also hit very hard. But it was a very pleasant surprise for us, and I think that 2-3 months of constant calling and talking to the customer, not about money but about
their well-being.
Their well-being, actually, I think it made us closer to the customer. From the customer point of view, whether the customer felt good or not, but we felt good of reaching out to these people and trying to find out how they are doing. And when we, that was a good thing that I think that has happened during the worst times.
Has the pain completely gone now?
Yeah.
It's been a little close to 2 years now. So,
yep.
You can say that
pain is almost gone, because transport sector is doing well. Freight rates are firm. Loads are available. A lot of now with a lot of these aggregators coming into the picture, return loads are available for long hauls, which is and there is also the FASTag at toll gates actually, has, I think, is saving a lot of money, both in terms of fuel as well as the runtime of the vehicle.
Correct.
So there is a faster turnaround time for the vehicle. Loads are, they are getting more loads, and of course the highways are, whatever said and done, the highways are actually the way they are maintained is also reduced a lot of wear and tear on the vehicle, on the tires, better fuel efficiency. I think all this coupled, they are doing well today, because the best I would say barometer whether the trucking industry is doing well or not is to look at the sales of these auction platforms of trucks. There is very little available on the repossessed vehicle market. There is not much of a stock available. So that means people are making good money. Financiers are also, their recoveries are good, so they are not forced to repossess a vehicle. And some of the banks now understood that repossession is not the
Best business
solution.
strategy. Yeah.
It is basically you need to support these guys.
Correct.
These guys, and you'll be surprised to know that some of the private banks and public sector banks now have come into our thinking and supporting this truck operators, which is a beautiful thing to do.
In your interactions with the financiers, other people who are in the same space, what is the one remaining challenge at this point in time? More or less, you figured it out. You figured out the business. You know how it works. You know how the customer thinks. But what is the one challenge that remains?
See, if you leave the top, say 10, 15, 20 NBFCs out, I think the challenge for most of my colleagues in the industry, other than these guys, are liabilities. Because of the ratings, their size, they're actually finding it hard to raise liability. So they are getting into co-lending arrangements with banks, which is also okay. See, end of the day, I feel the ecosystem today should be the fintechs, NBFCs and banks. If we work together, I think it's a win-win game where we would be able to deliver credit at a cheaper rate, much faster, and when it is needed. And it's a win-win game for the borrower as well as all the three of us.
Yeah.
So it has to, probably it's evolving, and it's good that the regulator has come up with the FLDG again, which was a big constraint earlier for a lot of,
NBFC fintech sort of arrangements.
yeah, arrangements. So I think that should help in channeling
5% good enough? But
see, something is better than nothing.
Okay.
So whether it's good or not, at least it's a. I mean, it gives some comfort. I mean, what is good enough is basically, end of the day, you need to look at the underwriting model of the other guy and then depend on him. It was 10% earlier. It would have been good if it's 10%, but 5% is okay. Because the smaller guys, for them also, even to find that 5% for some of these guys is difficult, not easy. So it's okay.
So one of the things that the RBI, as part of its, now I'm digressing a little bit as well, but this is an interesting topic to me, so I'm asking you. When talking about FLDG and the arrangement between NBFCs and fintechs, one point that the RBI was very concerned about is rent and NBFC sort of an idea where the NBFC's balance sheet becomes available for rent for the fintech because there's no regulatory problems. The NBFC is the regulated entity and we are the one doing the business on their name. How much of a problem is that on the ground? Does it really matter? Is it really such a bad thing?
No, I wouldn't call it as a bad thing, but I think the regulator is also a little concerned because a lot of these fintechs are raising money from the market. See, it may not be debt. Most of these fintechs today, more than debt, I think they are working with the capital. They have raised huge amounts of capital, and that's the capital they're burning. I mean, I wouldn't call it as burning. I think that's the capital they're lending. Probably the regulator is worried that if this becomes uncontrolled and suddenly expands, then there is no, then trying to regulate it could be too late. And as you said, some of these NBFCs, maybe they are worried that some of these NBFCs, they collapse, the entire sector could get affected. Probably that is their worry.
Systemic issue.
That could be their worry, but yeah, I think they have taken this step at an early stage, which could be good for the industry. End of the day, I think the new measures would only help industry to grow rather than curtail what is happening.
Since fintechs are in discussion at this point in time, you've also started with the personal loans and the unsecured part of the business under this new arrangement, right? The new format of Shriram. I'm curious to understand, what have you learned when it comes to underwriting short-term unsecured credit, because you were dealing with even at City Union Finance, the focus was on two-wheelers, small business loans. how is personal finance different? How has the organization had to change its underwriting?
Two things here is, one is unsecured business lending, the other one you talked about is the personal loan. Unsecured business lending we were doing even when we were
Before,
in Shriram
yeah.
Finance.
Yeah.
So,
But the ticket size changes in personal loans.
personal loan, no, personal loan today our ticket size is about 75,000.
Correct.
So, which is not, and that is only to our existing customer who has a track record. So, if it's, and these personal loans are not available to my business customers. Because if the business customer needs money, I would rather evaluate him on his business need and give him a top up on the business loan or give him one more loan rather than give him a personal loan, not needed. So, personal loan is mostly goes to whatever salaried customers we have, and really small micro businesses where they don't need a lot of money, they need about 50,000 rupees for bringing in some stock into their grocery store, small grocery stores or vegetable stores and like that. So, this is basically a fairly straightforward underwriting where you look at the past 24 months. Typically, two-wheeler is a 24 months. So, it's mostly goes to our two-wheeler customers. His track record, what is the EMI he has paid, at what dates he has paid, all that, and build a mechanism basing on that. Anybody who wants anything above 50,000, we would actually our executives go and meet the customer and try to understand his cash flows and then deal with it. For the general public at large personal loan, we have not yet launched. We may launch it next month, but then again there also we have we have started this because we thought we should be there in all the segments. There we would be probably limiting ourselves to about 250-300 organizations in the country and focus on that. We are not looking at volumes. We want to, first 2-3 years we want to understand the behavior and then move forward. But for that we choose about 300 odd organizations, not the top 300. But somewhere in the middle. To the lower rung, probably about organizations with about 100 crore plus turnovers. Small organizations with about 25, 30, 40 employees. That is where we want to focus on.
Is there a specific reason for just that?
See, today personal loan market is a very, very competitive market. If you are focusing on the top 100, probably those guys get every day 10 offers a day and at rates that are
far more competitive.
Not far more competitive, probably at rates that cost me my funds. So, it's not even competitive, I borrow at that rate. So, that's
you can't offer that.
That's no point in even trying to get there. So, and we see a vacuum in this segment. So, where you will get a better yield and also you are servicing a need. So, that's what took us there.
Yeah. A little while earlier you mentioned that for some of your other colleagues in the business, liabilities has that, because this has been, I'm hearing the same sort of problem since the island of crisis. A lot of NBFCs faced a severe funding crunch. Some of them even failed at the end of it. But I'm just, what is ailing it now? Because I think banks are sitting on excess liquidity. They would be more than happy to lend, right?
Yeah, I think it also depends on, banks are also looking at this, your size, your balance sheet size and your ratings, which can only improve over a period of time.
Correct.
So, that's the reason I think why smaller NBFCs are facing this cash crunch. To just give you an example, I met one MD and CEO of a small NBFC, which has about 500 crores of AUM. So, he came and met me saying whether as an organization we can help him. He has already raised equity from private equity players, individuals. It's been about 6 years, 7 years now. Now, those players are looking at an exit. for him to get a private equity today in this market it's difficult, because again, if I am an investor, I would like to give you money for growth and not for exiting an investor in
Correct,
this market.
exactly. Yeah.
So he's struggling there. His problem is he is also not able to generate enough liability to grow. So he is now resorting to co-lending, but that's a fee income. Your book is not going to grow. That it's like a the perennial. It's like a catch-22 for him.
Correct.
He cannot borrow, so he has to co-originate. Coordination means his book will not grow much. Then he cannot borrow. So it's a
vicious cycle.
So where is the break? Or he should be happy with that 450-500 crores and grow it slowly and earn a lot of fee income. But fee income, you don't get a valuation to raise equity also. So it's a cycle which is
difficult to break.
It will take its own time.
Fair enough. I also want to tackle a little bit about the regulatory environment that we are in at this point in time, where you've got a tiered structure of regulation for NBFCs, right? We already have seen the largest housing finance company now merging with its bank. Even though the HFC is the parent, but the parent is merging with the child at this point in time. But is that the best possible future for an NBFC, just graduating to a bank, or do you think the NBFC model in itself can exist at that scale?
See, I personally feel it can exist at that scale. What are we looking at today? At an upper layer, we are almost regulated as much as a bank. As well as a bank. In fact, I would say NBFCs are a little worse off. When you look at banks are still in IGAP, I am in Ind AS, right? And even on the provisioning side, when I create a provision, I don't get a tax relief, whereas banks do. So, in fact, probably the environment is a little more friendly to banks today. But in this scenario, when I am surviving, I would like to be. I mean, I don't have an incentive to become a bank today. For a lot of our large NBFCs today, who are in the upper layer, see, for me, as long as I'm able to raise liability, I can keep growing my book. That's not scale is not, I don't think scale is an issue. Scale is something that should force you into becoming a bank. And we are comfortable as we are here.
Correct.
So, I mean, that's a choice that people need to make.
Curious to understand on the current environment of business that exists. You've got one part of the lending ecosystem, the banks. A lot of them, it's RBI governor said it's a skewed liquidity position. Some are heavy on liquidity, others are very, very light. But still, overall as a system, there's excess liquidity. You've got the NBFCs which are growing. Some of a part of it is under pain, but overall things are looking sharply, significantly better. On the third hand, we're talking about sort of a slowing GDP, even though it's at 6.5% according to the RBI's own projections, but it's still slowing from the previous year. As a lender, when you're looking at the current environment, on the forthcoming environment, what exactly is something that you're excited about, and what is it that worries you?
See, I think I'm truly excited about the Indian businessman. We have seen enough cycles, starting from your ILFS, liquidity crunch. I would say go a little further and say demonetization, ILFS, then the COVID, a complete lockdown of the country. And all this, most of these businessmen have fought and won the war against all this. So, I'm excited about what's happening in this space, in this, not just on the technology side, but on the difference that this digital is making in the lives of the smallest of the businessmen today. So when I go for a walk in the morning or in the evening, I see people paying. I mean, I read enough stories. I see people paying. For one, they buy one corn cob and pay for that. That's about 4 rupees, 5 rupees. 5 rupees tea they are paying. The guy is accepting. And I mean, this is something that is actually revolutionized. People, it is also actually helped people from the problem of carrying
Cash with them.
cash, change. Cash is okay, change. Small change. And it made life so much easy for all these guys. And they are getting. See, your tea shop guy in the corner is, when he is accepting these UPI payments, you are actually able to track his income today.
Correct.
Not just on his say so.
Correct. There's proof.
And I've actually talked to these guys, and the tea shop guy tells me that 60% of his payments come through an UPI, which is a good barometer for you to understand what is his. He may be just setting up a table and selling tea there, but you know how long he's been selling there. Depending on the sales, it's a price pot.
Correct.
Right? So, probably you can actually help him acquire a cart there.
Yeah.
Give him 50,000 rupees, buy a cart, buy a, better
burner
equipment.
and,
Whatever.
you
So,
need.
what I'm saying is, what I'm trying to get at is, so the ability for the small businessman to prove what they are making and also to get a cheaper credit. In fact, I used to, earlier times, I used to go and tell my customers. They used to say, sir, my sales are 1 lakh, but most of it is cash sales. So I used to tell them, formalize it. Your cost of paying income tax will be offset by your cost of borrowing.
Correct.
Most of the people don't understand that, don't get it. So we used to keep talking to these guys saying, boss, formalize it. You can actually then get credit at a much cheaper rate.
Right.
And your tax rate, and you will be happy because you don't have to hide anything. Your borrowing rate is coming down, your tax rate, you may be paying a little more tax, but you can sleep peacefully. You don't have to worry about anything. I think that is going to happen to this economy, which is I'm excited about. The formalization of the economy, because I think it's one single factor, UPI. And that's, probably 10 years from now, 10 years is too long probably in this current environment. Probably 4 or 5 years from now, cash could go away. In the sense, though, post demonetization, there was a lot of criticism that much more currency was printed and all that. But I think it's slowly going away. See, if you look at the currency, somehow I believe it's only in the upper crust. Most of the currency is there and not with the
Lower end of the.
lower end of the spectrum where they don't need cash today.
So that is digitized.
That is digital for me.
Yeah.
That is how am I making a difference to your life? To my customer's life is digital for me. Not boasting that I do everything end to end. I just give him money in 24 hours is not the only criteria. But the whole process has to be not just the customer. Even my employee's life has to become easier, so that he has more free time to talk to my customer. So that's digital for me.
What's the worrying part?
See, as of now, if you ask me what is worrying you, no. Except for the global economy, I'm not worried about the Indian economy. Politics will keep happening. Governments will come and go. But end of the day, if we are focused on what we are doing, majority of the businesses, the bureaucracy is focused on what is good for the country. I think I'm not worried. So looks like with the rate pause, though they have given an indication that there are two more raises, but I'm thinking that if looks like the Americans are now getting out of their cold, so we will not sneeze.
Okay. Thank you so much, Mr. Chakravarti, for joining us on this
Thank you
conversation.
so much.
Pleasure
Thank you.
talking to you, sir.
Thank you, sir. Thank you
See
so
you,
much,
sir.
boss.